The answer is the first country that can print currency and buy Bitcoin wins. A lot of institutional investors and families, they know this instinctively. You'll never find a Wall Street hedge fund master of the universe that brags that his strategy is hold cash and T-bills. A classic economist says money is a medium of exchange, a unit of account, a store of value, and then they stop thinking. No intelligent person in America thinks that the US dollar is a store of value. What is money? A classic economist says money is a medium of exchange, a unit of account, a store of value, and then they stop thinking. Well, okay, so what does that mean? Well, it turns out that in Argentina, the medium of exchange is the peso, the unit of account is the dollar, the store of the value is neither. No intelligent person in America thinks that the US dollar is a store of value. If it was, you would find a billionaire that would say that 95% of their assets are in cash accounts in the dollar, and no one is, right? Everybody knows the store of value is something else. Maybe it's the S&P index. Maybe it's a building on Park Avenue. Maybe it's a sports team. So in 1914, we had a war. The war was financed with debt. If you dig a bit, you find out that the Bank of England bought a lot of the war bonds. And you'll find out that the U.S., the U.S. government bought a lot of the U.S. bonds. So we issued a lot of debt. The governments bought the debt. After the war, they had inflation, right? There's a phrase in New York, right? Pre-war. I think they're referring to World War II, but generally pre-war means before the war, we had good stuff and we built really good, high quality buildings. And then after the war, for whatever reason, we lowered our standards. In Miami Beach, an acre of land before the war was $10,000. Today, it's $10 million.
Here is Michael Saylor, the chairman of MicroStrategy, analyzing Bitcoin as a transformative capital asset capable of altering the financial trajectory of both sovereign states and corporations. He asserts that Bitcoin can be a lifeline for countries and companies teetering on the brink of collapse. Saylor highlights the destructive impact of the US dollar devaluation over time, which has eroded people's capital. In contrast, he argues that Bitcoin serves as a reliable store of value, preserving wealth over time. As we bring you clips from the interview, take a moment to like the video, subscribe to the channel, and turn post notifications for more video like this. You can join the conversation by dropping your thoughts, comments, and observations in the comment section below. Everything you do helps with YouTube algorithm and immensely contributes to the channel growth. Thank you and enjoy the video.
So what do you call it if the dollar is worth 0.1% of what it was 100 years ago? It's like, but that's where we are, right? So the currency will weaken, but intelligent people will, they will adopt a different asset as a store of value. And the best asset for a store of value in the 20th century, if you were wealthy, was property, like a building or land. And maybe if you were middle class, it was a diversified stock portfolio. Clearly the Vanguard 500 or the S&P 500 became the primary capital asset, and it defined the cost of capital for most, corporations and most institutional pursuits. So I think Bitcoin, if you look at it, it's money, but it's the store of value element of money. I think that strong governments will continue to issue currency. They will designate it legal tender. When the country collapses, like El Salvador after the Civil War, or Nigeria, or parts of Africa, when your country or nation state's no longer functional, you won't have a currency. You will adopt somebody else's currency, whether it's the CFA or the euro or the CNY or the USD. The right way to think about the world going forward is every intelligent person, every reasonable person is going to adopt the local currency as a medium of exchange. They're going to adopt the world reserve currency, as their mid-level, unit of account. That's probably the dollar, unless you're in the Chinese sphere of influence. It might be the CNY. And then they're going to, if they're a conventional investor, A traditional investor, and that's like 99% of the money in the world, they're going to use the S&P index as a store of value, or they're going to have high quality, desirable real estate in the Hamptons or New York or Miami, or they're going to have their home, or they're going to have, probably it's that. Even most wealthy people don't even think bonds are a store of value. They generally think it's, JP Morgan's survey of family offices says 45% of their money's in alternative assets.
Right. Which has been going up every year, I think, pretty consistently over the last decade or so.
Yeah, so traditional investors will use alt assets, equity, or real estate type portfolios, and then occasionally, if they're lucky, they get collectibles, Picassos, or the jets, right? Obviously, I happen to believe Bitcoin is by far the best form of property, and it's obviously the best form of digital property. The best way to think of it is a capital asset. So I view it as digital capital. It's going to reshape the capital markets. And why is it a little bit better than property? Property evokes $1 billion or $100 million digital warehouse or digital building, but most people don't think that they can decompose and teleport their buildings. But capital, like treasury assets, they need to be liquid. And so if I have $1 billion on my balance sheet and I can liquidate 1% of it a day, and if I can buy $1 million more worth of property or sell $8 million worth of property, as a corporation, I can use Bitcoin as a capital asset.
So my question to you is, the Bank of Japan calls up Michael Saylor and says, listen, we need you to come over here and fix our problem. Their problem being their currency is weakening by the day. The other side of their problem is their economy is a bit of a disaster. How would you try to help them through this process?
The answer is the first country that can print currency and buy Bitcoin wins.
In the aftermath of World War II, Japan emerged from the devastation of war with a determination to rebuild and modernize its economy. Guided by a vision of industrialization and export-led growth, Japan embarked on a remarkable economic transformation that would come to be known as the Japanese economic miracle. Key to Japan's success was its focus on manufacturing and exports, particularly in industries such as automobiles, electronics, and machinery. Central to Japan's economic model was the close collaboration between government, industry, and financial institutions, often referred to as the Japan Inc. model. Japan's economy experienced unprecedented growth throughout the latter half of the 20th century, with GDP expanding at an average annual rate of over 7% during the 1960s and 1970s. However, Japan's economic success story also faced challenges and setbacks. The bursting of the asset price bubble in the early 1990s led to a prolonged period of economic stagnation, known as the Lost Decade. In recent years, Japan has grappled with the impact of globalization, technological disruption, and shifts in global trade dynamics. Rising global commodity prices due to factors like the war in Ukraine are contributing to inflation in Japan. Experts predict a real GDP growth rate of around 0.6% for 2024, marking a fourth consecutive year of expansion, albeit slow compared to historical trends. Inflation remains a key challenge, but signs of price increases suggest Japan may be nearing the Bank of Japan's target of 2%. Despite these challenges, Japan continues to adapt and innovate, positioning itself for continued economic growth and prosperity in the 21st century. Let's get back to the video.
Japan issues $1 billion of yen, buys $1 billion of Bitcoin. Bitcoin, if they're smart, they would issue $20 billion of yen, buy $20 billion of Bitcoin. When they put out the press release, Bitcoin would triple. They would have $60 billion of treasury assets appreciating at 30% a year. And they would end up with a $20 billion positive balance of payments, right? And it becomes a self-fulfilling prophecy. It's tricky for Japan because they're such a big economy. It would work a lot better for Turkey. Like with Turkey, they need about a $20 billion boost in order to plug their balance of payments. So a mid-sized country could probably do it, but you'd have to be aggressive. If we come back to a company, a company's stock is just like a country's currency.
Right.
Right? The country can issue currency. By the way, the reason El Salvador isn't quite synonymous is El Salvador doesn't have their own currency. So what I said, the first country to print their own currency and buy Bitcoin wins. You need to be able to issue $10 billion of your currency, swap it for $10 billion of Bitcoin, grow the Bitcoin 30% a year. And that's the way a treasury reserve asset's supposed to work, right? Because everybody then stampedes into that with you. If you hold $1 billion and you put it in T-bills, your after-tax yield's 3%, the cost of capital is 12%. Bitcoin's return has been 40+%, but Bitcoin will almost certainly always outperform the S&P index. So Bitcoin does double the S&P index and the T-bill does a fourth of the S&P index. The real conundrum here is that the capital asset of the world, of every family, every institution, well, actually every corporation, every government, the capital asset is dilutive and not accretive. A lot of institutional investors and families, they know this instinctively. You'll never find a Wall Street hedge fund master of the universe that brags that his strategy is hold cash and T-bills. So normally the perversity is the shareholders are screaming at Apple and Meta, and they're saying, hey, you guys need to give us back the capital via buyback because you're going to hold T-bills, and the T-bills are not going to beat the cost of capital. And so we see that with Berkshire Hathaway. They got $190 billion of cash, right? And you see Apple going to do a $100 billion buyback and Meta a $50 billion buyback. Well, they're decapitalizing. And what are the people that receive the capital going to do with the capital? Well, they're definitely not investing it in the stuff that those corporations would have invested in. They're going to invest it in at worst, the S&P index, right? That's the default. And if you can't do that, you're destroying capital. So my advice to a sovereign wealth fund is, you basically start to buy Bitcoin as digital capital. My advice to an aggressive small country, if you're small, mid-sized country and you can print your own currency, you either print the currency to buy Bitcoin or you issue sovereign debt and swap it right into Bitcoin immediately, right? You can borrow money cheap and you loan it to Bitcoin at 24% return or better, right? So that's obvious, but I'm not going to hold my breath on countries because it's a very political thing. I think that the people that are the obvious beneficiaries that hopefully are listening to this podcast would be shareholders, officers, and directors of the 10,000 small, mid-sized companies, especially publicly traded companies, which in essence can't outperform the Magnificent Seven. If you don't think you can outperform Google and Meta and Microsoft and Nvidia, and you have some money, you either take the cash and buy Bitcoin, you issue equity and buy Bitcoin, or you issue debt, either senior debt, or even better, you issue convertible debt, convertible to your equity, and you buy Bitcoin. This last week, you saw Block announce that they're going to start buying Bitcoin every month. You've seen accretion of Bitcoin by a lot of Bitcoin miners. A lot of them are actually not selling as much Bitcoin as they're mining now. I think you're going to see more Bitcoin miners buying more. I think you're going to see more Bitcoin exchanges buying more. I think you see the existing ETFs accumulating, but now we're up to 22 spot ETFs in the world. And they're all in a marketing war with each other. And so they're going to go harder. So I think, and at some point, you're going to see these Russell 1000 companies, right? Which one of them wants to crawl out of their zombie state? It's like, you're just waiting for someone to decide they want the money. So I think that when they do that, they drive up the price of Bitcoin and I have to chase it. My first Bitcoins were below 10,000. And, and I'm buying Bitcoin in the 60s now, and that's okay. I don't know where we'll get to. I know we'll get more. We'll accrete from here. We will acquire more Bitcoin than we have right now, and we'll do it via, organic cash and via debt, especially convertible debt, and we'll do it via equity. And that'll be a function of capital markets and all sorts of other dynamics. But I think, Archimedes said, you give me a lever long enough and a place to stand, I can move the world. Well, the the place to stand is Bitcoin. It's not a commodity, it's a scarcity. So if it's a scarcity, it's like if I said to you, there's one city, it's at the trade crossroads of the world. It's the center of the digital economy. One day, everybody on the planet's going to be moving their capital through that city, but there's only 276 by 276 by 276 blocks in that city. And by the way, it's like 94% occupied, but you can buy another one of those blocks if you want. Do you want to buy some more? And the answer is, yeah, I want to keep buying, because just like if I could have bought New York or Manhattan 100 years ago, or 50, or 200, or 30, or 300, tell me, at what year, how many years ago was it a bad idea, right? I think it's always been a good idea. If you can hold, right? As long as you can hold the property. And why is Manhattan a good idea? Because it's a granite island at the middle of Long Island Sound and the Hudson, and it's got great natural harbors. It's the gateway to North America. It was always the best place to put a port, right? And if you look at it and you cruise around it and you stare at it and you look at the fact you can build that on top of that schist, it's obvious people are going to want to live in and do business in that city for hundreds of years.
Here you have it, Michael Saylor presenting yet another insightful analysis on Bitcoin. He critiques governments worldwide for weakening their sovereign currencies and imposing inflation on their citizens. According to Saylor, a prudent nation would adopt Bitcoin as a store of value, while a savvy corporation would embrace Bitcoin as a treasury or capital asset. But what do you think? Please drop your comments and observations in the comments section, subscribe to the channel, and give this video a thumbs up. Thanks for watching.